You know, when you're walking down a really busy main street and you pass one of those massive department stores?
Oh, yeah. Bright neon lights, giant sale signs in the window.
Exactly. People are just rushing in and out with those oversized shopping bags. It's it's chaotic volume
Right.
because their entire business model is just about getting as many footfalls through those sliding glass doors as humanly possible, you know?
Yeah, I mean, the product matters, sure, but the volume is what actually pays the rent. You just get them in, get them to the register, turn over the inventory, and then, get the next wave of people inside.
Right. But then you keep walking and you get a little further down the street away from all that noise and you see this tiny, perfectly lit high-end boutique.
Oh, totally different vibe.
Completely. There are maybe like 3 items displayed in the window. The door handle is made of heavy, solid brass, and you can see the lighting inside is just really warm and deliberate.
Yeah, it feels intentional.
Exactly. You haven't even stepped through the door yet, but the ambiance, the vibe, that careful curation, it hits you immediately. You instantly know that everything in that store is going to cost a premium, and you also know you're going to get a premium experience.
Because the presentation basically becomes the product at that point.
Mm-hmm.
I mean, you walk into that boutique and you're paying for the lighting, the quiet, the attention to detail, just as much as the actual item on the shelf.
Spot on. And that boutique, that is the Blackheath Airbnb market in a nutshell.
It really is.
So welcome to today's deep dive, especially to you, the learner, whether you're out for a walk right now, prepping for a meeting, or just grabbing a coffee. We are really glad you're here with us.
Absolutely.
Today, our mission is to decode the Blackheath short-term rental market using some really fresh, straight-out-of-the-oven data from April 2026. We are going to look beneath the surface of these numbers to figure out what is actually happening in this highly specific ecosystem.
And why some stunning properties are secretly bleeding money.
Right, yeah. And how owners can align their homes with the reality of this market. Because, if you've ever looked at neighboring areas in the Blue Mountains like Katoomba, which operates very much like that busy, volume-driven department store we just talked about, you have to throw out that playbook.
You really do.
Blackheath is entirely different. It's quieter. It's considered. It is what the data calls a positioning market.
Yeah, and treating a boutique like a department store is basically the fastest way to run a premium asset into the ground.
Mm.
Katoomba is all about capturing that organic traffic, right? Backpackers, day trippers, last-minute weekenders.
Just getting bodies in the door.
Exactly. But Blackheath is about curating an experience for a guest who probably planned this trip, like months in advance.
Yeah.
And when we look at the April 2026 data, the consequences for misunderstanding that distinction are really severe.
Yeah, I was actually looking at the April 2026 snapshot before we started, and the baseline numbers paint a very specific picture. So Blackheath currently has 130 active listings, and the median nightly rate is sitting at about $406, with a premium band hovering comfortably around $520 a night. But the metric that I honestly just stared at for a solid 5 minutes was the average rating.
Oh, I know exactly which one you mean.
Right. Across the entire market, the average guest rating is a 4.84. I mean, a 4.84 across 130 properties is just an incredibly high bar.
It is, and honestly, that 4.84 is the most important number in the entire data set. It completely dictates the market reality.
How so?
Well, in a volume market, like Katoomba, a 4.5 or a 4.6 average is fine because you're mostly competing on price. But in Blackheath, a 4.84 average means your margin for error is essentially zero.
Wow, zero margin for error.
Basically, yeah. It tells us that the guests booking these properties have remarkably high expectations and, for the most part, the hosts are actually meeting them. Blackheath attracts a guest who is trying to escape. They're booking an atmosphere of complete calm, absolute comfort, and this highly polished operational experience.
Okay, so performance here isn't just about, tweaking your headline to show up on the first page of the search results.
No, not at all.
It's driven by how the property actually feels to the guest when they grab that heavy brass door handle.
Yeah.
But I always struggle with this concept a bit when we analyze real estate or rental data.
What do you mean?
Well, if performance is based on something as subjective and fuzzy as how a place feels, how do we actually measure that in cold, hard data? How does an algorithm know if a place feels calming?
That's a great question because algorithms don't understand feelings, right?
Right.
But they are incredibly good at understanding the mathematical fallout of those feelings. So we measure that feeling through the review mechanics. A guest paying over $400 a night expects perfection.
Yeah, I definitely would.
Right. And if the atmosphere is off and say the lighting is harsh or the heating takes way too long to kick in, or maybe the furniture looks great in photos but is wildly uncomfortable to actually sit on, they usually won't scream and chat about it.
They won't.
No, they won't demand a refund or anything. But they will quietly leave a 4-star review instead of a 5-star.
And a 4-star review sounds okay in a vacuum, but mathematically that's devastating, isn't it?
It really is.
Because if your average is a 5.0 and you get a single 4-star review, your average drops to a 4.5. It takes an enormous volume of consecutive 5-star reviews just to claw your way back up to that 4.84 market average.
Exactly. And the algorithm sees that mathematical drop, and it instantly penalizes your visibility. The platform's logic is pretty simple. Why promote a 4.7 property when there are 54.9 properties in the exact same neighborhood?
Makes sense.
Yeah, so that is how subjective feelings are translated into hard algorithmic data.
Which introduces a phenomenon the sources call quiet underperformance. I love this phrase, by the way, even if it is a bit terrifying for an owner.
It's very accurate, though.
Because the expectations for this specific atmosphere are so high, failing to meet them doesn't usually result in, like, a spectacular fiery crash. You know, your listing doesn't get banned, the roof doesn't cave in.
Right, right.
Instead, it creates the slow, silent leak in your revenue.
And the scary part is, owners often don't realize they're failing until they are already in really deep trouble. They get lulled into a false sense of security by the weekend rush.
Yeah, to make this relatable for you listening, imagine you own a beautifully decorated restaurant. On Saturday night, there is a line out the door. Every single table is packed. You're turning people away.
A great night.
Exactly. As the owner, you're standing by the bar, high-fiving the chef, thinking your business model is just flawless. But then Tuesday rolls around. The restaurant is empty. Wednesday, empty. Thursday, maybe like one table.
Ouch.
You are actually bleeding money on the full monthly calendar.
Yeah.
The overhead is just eating you alive. But the dopamine hit of that massive Saturday night rush completely blinds you to the fact that your business is failing.
And we see that exact restaurant scenario playing out across the Blackheath Airbnb market all the time.
Really? Just the weekends carrying everything.
Yeah. The Friday and Saturday night Sydney crowd drives up, they want a premium spot, and they'll pay top dollar for it. So the host gets that booking alert, sees a $1,200 payout for the weekend, and thinks they are killing it.
But they're not.
Well, no, because that strong weekend booking is masking a completely non-existent weekday strategy. They have no plan to capture the midweek traveler, so the property just sits empty for 5 days.
Or we see premium homes using entirely generic pricing, right?
Oh, yes, that's another big one.
Like, let's say an owner has this stunning, architecturally unique property, but they just log into the platform and set a flat rate of $450 a night for every single day of the year.
Which is crazy.
Right. They aren't pricing for the boutique, they're pricing for the department store.
Exactly. Setting a static price in a dynamic, premium market basically guarantees failure. And another massive trap involves listings that look incredible in professional photos, but totally fail to convert those views into actual bookings.
Why does that happen? Because of the listing description.
Yes. The description doesn't communicate the atmosphere. The photos show this gorgeous fireplace, but the description reads like a sterile hotel manual. And the guest is looking for a story, a feeling of retreat. If the listing fails to provide it, they move on.
And then, of course, there are the operational gaps.
Right.
The cleaners leave a faint, musty smell in the hallway, or the host takes 6 hours to reply about the Wi-Fi password. These microscopic gaps slowly erode guest confidence, bringing in those 4-star reviews we talked about.
Yep. And by the time the host realizes they are losing money, their listing's reputation is so mathematically damaged that recovery requires a massive overhaul.
The stakes are just so high, and the data from the transition between March and April of 2026 shows that this quiet underperformance is becoming an even more dangerous trap right now.
It is. The market itself is actively shifting.
Let's look at these numbers because at first glance, they honestly confused me a bit. So from March to April, the active listing count in Blackheath went up from 121 to 130 listings. Supply increased. But at the same time, the median nightly rate dropped from $423 down to $406. Now, I have to stop here because I took Econ 101.
Oh, boy.
I look at those numbers. Supply goes up by nearly 10 listings, and the median price drops by $17. My immediate conclusion is that demand is drying up, The market is softening, hosts are getting desperate with their pricing, and people just aren't traveling to Blackheath as much.
Right, and that is the most common and, frankly, the most dangerous misinterpretation of this specific data set.
Really? Where am I going wrong?
You're looking at the surface-level economics, but you have to look at the behavioral metrics beneath it. If demand were truly drying up, we would see a corresponding drop in review depth.
Meaning fewer reviews overall.
Exactly. Fewer people would be staying, meaning fewer reviews would be generated. We'd also likely see a drop in review scores, because when hosts panic and drop prices to the floor, they attract a lower-tier guest who treats the property poorly, and the host simultaneously cuts corners on cleaning to save money.
Okay, I see where you're going. But the data says review scores stayed rock solid at that 4.84 mark.
They stayed solid, and review volume actually increased significantly across the market. People are still booking. The total pie of guests coming to Blackheath didn't shrink at all.
So what actually happened?
What happened is a positioning shift. Supply increased by 9 liftings, which meant the existing pool of high-quality guests was distributed across slightly more options.
Yeah.
To remain competitive and keep their calendars full, savvy hosts dynamically adjusted their pricing downward.
I see.
They traded a slightly lower nightly rate for higher occupancy. So this is not a demand problem, it is a market recalibration.
Okay, but I want to push back on that for a second. Even if it's just a recalibration, a $17 drop in the median rate means somebody's feeling the squeeze, right?
Oh, absolutely.
Because if prices have to shift down because there are more options on the table, not every property is going to absorb that hit equally. Someone is losing bookings to those 9 new listings.
You're completely right to point that out. And the squeeze is not distributed evenly. To understand who is really feeling the pain of that downward pressure, we have to look at the property staircase.
The pricing tiers.
Right, the pricing tiers in Blackheath are very rigidly defined based on bedroom count.
Yeah, I have the staircase right here. So based on the April data, 1-bedroom listings were sitting at a median of around $205 a night. 2 bedrooms jump to about $375. 3 bedrooms go up to $435.
Okay.
And then 4 bedrooms take this massive leap all the way up to around $648 a night.
Right. Now notice the spread there. Moving from a 3-bedroom to a 4-bedroom isn't just adding an extra bed. It is a $213 leap in nightly price.
That's huge.
It is, and that leap changes the demographic entirely. You're no longer hosting a couple or a small family. You are hosting 2 families splitting the cost, or maybe a large executive group. The coordination needs, the wear and tear, and the expectations just skyrocket at that $648 price point.
But the most vital insight from this data set isn't at the top of the staircase with those luxury 4 bedrooms. It's actually sitting at the very bottom.
The 1-bedrooms.
Yeah, I was digging through the segment data, and there's this massive anomaly with the 1-bedroom properties.
Oh, it's wild. The 1-bedroom listings in Blackheath have the strongest review depth in the entire market. They are averaging an astonishing 169 reviews per listing.
169 reviews. That is a mountain of social proof.
It really is. Think of the Airbnb algorithm like this raging ocean storm, right? It's constantly shifting listings up and down based on clicks, pricing, and new competitors entering the market.
Right.
Those 169 reviews act as a massive, heavy iron anchor. The algorithm sees that anchor and registers the property as entirely safe, highly reliable, and guaranteed to generate a platform fee.
So it just pins them to the top?
Exactly. It essentially locks these smaller, established 1-bedroom listings to the top of the search results. It makes them almost impervious to market fluctuations.
Right. That algorithmic anchor metaphor makes so much sense, but man, it also highlights a brutal reality for people entering this market right now.
Oh, definitely.
Like, imagine you're an investor or a new owner. You just bought a stunning 4-bedroom Victorian character home in Blackheath. You've poured money into the renovation. The furniture is high-end. The linens are imported. The photos belong in an architectural magazine.
Sounds beautiful.
Right. You look at that pricing staircase and see average 4 bedrooms getting $648 a night. So you think, well, my place is brand new and much nicer than average. I'll list it for $750.
A classic mistake.
But you're a shiny new boat in that algorithmic storm. You have 0 reviews. You don't have an anchor.
And that is the ego pricing trap. It catches new owners constantly. They price their property based on what they personally believe their renovation is worth, or they blindly cozy the pricing of the 4-bedroom listing down the street.
Completely ignoring the fact that the listing down the street has an anchor of 100 reviews padding its fall.
Right. They operate on assumptions instead of market mechanics. And because weekend demand does all the heavy lifting, as we talked about earlier, that overpriced 4-bedroom might actually get booked on a Saturday by a desperate group of 8 friends splitting the cost at the last minute.
Which just reinforces the bad behavior.
Exactly. The owner gets that $750 payout, feels vindicated, and completely ignores the fact that the property is sitting empty from Sunday to Thursday. The midweek traveler, the couple looking for a quiet Tuesday retreat, they are never going to pay an ego-driven $750 premium for a listing with zero historical trust.
So they fall right back into the quiet underperformance trap, the empty restaurant on a Tuesday.
Exactly.
Okay, so if the algorithm prioritizes historical anchors and ego pricing guarantees an empty midweek calendar, how does an owner actually win in Blackheath right now? Because I kept seeing this specific term in the source materials, the hosting strategy.
Yeah.
Before we even get into the weeds of what it does, what does actually stand for?
Stands for upmarket management. It is a specific philosophy and operational approach designed for high expectation, boutique markets exactly like Blackheath.
Okay.
The core tenet of upmarket management is alignment over activity. It is not about throwing up flashy, generic 20% off discounts to panic book a Tuesday. It's about highly targeted, deliberate execution.
Alignment over activity sounds great on a bumper sticker, but if I own a 3-bedroom property out there, what does upmarket management actually look like for my calendar next week? Give us the mechanics.
Let's break it down. First, you have to protect your reviews at all costs, which means eliminating all operational friction.
Friction like what?
Like communication delays. In a volume market, if a guest messages you asking how to turn on the hot water and you reply 3 hours later, it's fine.
Yeah.
In an upmarket management scenario, that 3-hour delay is a guaranteed 4-star review for communication.
Wow.
You need automated systems, impeccable house manuals, and cleaning teams that are aggressively audited for consistency. You cannot sell a polished atmosphere if there is a single hair in the shower drain.
It's the heavy brass door handle again. It has to feel substantial and flawless every single time.
Yes, exactly.
Okay, what about the pricing mechanics? How do you actually fix the empty restaurant on a Tuesday?
You build a revenue engine tuned to the specific behavior of the Blackheath guest. You already know the Friday and Saturday demand is inelastic, people will pay the premium. So you capitalize there.
Right.
But you must actively shape your pricing to capture the shoulder nights.
Like Thursday and Sunday.
Yes. If your Saturday rate is $600, your Thursday and Sunday rates shouldn't be stubbornly sitting at $550. The upmarket management approach requires dropping those shoulder nights aggressively, sometimes 30 to 40%, just to incentivize the weekend guest to extend their stay by one more day.
Because an occupied night at $350 is infinitely better than an empty night at $0. And it keeps the algorithmic momentum going, right?
Precisely. It feeds the algorithm. Furthermore, you need a really deliberate midweek pricing strategy. You cannot rely on automated pricing tools that use generic hotel demand curves.
So what do?
You have to manually set midweek floors that attract the remote worker or the couple seeking a quiet retreat. You are basically trading peak margin for occupancy to build that review anchor we talked about.
Got it.
Blackheath severely punishes static pricing. It rewards alignment. You have to move with the April shifts, respect exactly where you sit on the property staircase, and patiently build your fortress of trust.
I think it's important to pause here and check in with you, the listener, about who this information matters for most. If you're an owner who relies heavily or maybe entirely on weekend bookings, you are currently at severe risk of that quiet underperformance.
Absolutely.
If you own a premium or character home in Blackheath and you have this nagging feeling in the back of your mind that it should be earning more, this is why it is not the house, it's the alignment.
Yeah.
Or, honestly, if you're just someone who needs a clear, data-driven benchmark to understand your own property's potential before making a major financial move, this data is your roadmap out of the dark.
Because relying on guesswork is a luxury you really cannot afford in a positioning market. When you guess, you leave money on the table. Or worse, you slowly bleed out your review score through operational friction until algorithmic recovery becomes almost mathematically impossible.
We've covered a massive amount of ground today. We started by taking a walk past the chaotic, volume-driven department store of Katoomba and stepped right into the quiet, highly calibrated boutique of Blackheath.
It's a completely different world.
It really is. We looked at the baseline numbers and uncovered how the demand for atmosphere over visibility is rigidly enforced by that 4.84 average rating. We explored the hidden, silent dangers of quiet underperformance and the trap of the empty Tuesday restaurant.
Right.
We also pushed through the March to April shift, proving that a drop in median price isn't a demand crash, but a market recalibration. We climbed the property staircase, unpacking why a $213 leap changes the guest demographic entirely.
And it was one bedrooms.
Right. We looked at why those one-bedroom listings with their 169 review anchors are such absolute juggernauts of trust. Finally, we laid out the mechanics of upmarket management, protecting your reviews through operational perfection, and using dynamic, aggressive midweek pricing to manage the entire week, not just the weekend rush.
That's the playbook.
So, if you want to apply this level of structure to your own property, you can explore the full Blackheath report from the sources we discussed today. Stop guessing and start aligning with the data.
And before we wrap up, I do want to leave you with a final thought to mull over as you go about the rest of your day.
Lay it on us.
We talked extensively about that one-bedroom anomaly, right? The fact that historical review depth creates an almost impenetrable algorithmic fortress for older established listings.
Yeah.
Well, in a premium market like Blackheath that relies entirely on trust, social proof, and atmosphere, how will brand new premium properties ever break into this ecosystem?
Oh, that's a good question.
What extreme outside-the-box strategies might a new host have to utilize just to survive that initial quiet underperformance period while they're hunting for those crucial first 50 reviews to build their own anchor?
That is a fascinating problem to solve. I mean, how do you convince someone to step into a brand new boutique when the shop next door has 100 people standing outside telling you how incredible it is?
Exactly.
It all comes back to the vibe, the flawless presentation, and the pricing alignment. Thanks for joining us on this Deep Dive Learner. We'll catch you next time.